Hello and welcome to Business Incorporated. Thanks for joining us. I am Bosin Amafaye. On today's program, Nigeria's inflation eases to 11.02% year-on-year in the month of August. And BRICS banks extend its first loan in its local currency, providing 7 billion rand for South African road, plus a look at West African central bankers who discuss in the next 10 days as they meet for their interest rate decisions. So let's begin with the latest data from Nigeria's Bureau of Statistics showing inflation eased to 11.02% year-on-year in the month of August, indicating a decline of 0.06%, while the headline index reduced to 0.99% on a month-on-month basis. The food index also fell to 11.17% compared to 13.39% recorded in July due to increases in the price of meat, bread and cereals, potatoes, yam and other tubers. Month-on-month, the food index also eased to 1.22% from 1.26% earlier. Meantime, core inflation eased to 8.68% year-on-year and 0.67% on a month-on-month basis. On the flip side, the urban inflation printed an increase to 11.48% year-on-year in August from 11.43%, but declined on a month-on-month basis to 1.04% from 1.07% recorded in July. On the flip side of that is where you see the rural index, the inflation easing to 10.61% on a yearly basis, and on a monthly basis tripped to 0.93% from the previous month of July. So let's go to the markets. Nigerian stock market is looking good for the second trading day, continuing its winning streak. At intraday today, the index was up about 0.1%. Meantime, the South African GSE, the broad index, reading 57,101, down 1.30%. In North Africa, the Egyptian market, we're tracking the EGX30, which is the biggest portfolio of stocks in the red territory, down about 1%. And you can see the Kenyan stock market there. Intraday, finishing Monday, 0.28%, and a positive reading, 144.21. Let's check in with the Middle East market. Most of the bourses were in red intraday Tuesday, except Abu Dhabi. The Abu Dhabi index was up about 0.2%, reading 5,170. Dubai financial market was up about 1%. Dubai Islamic Bank lost 0.4%, and Dubai's largest listed developer, Eba Properties, slipped 0.2%, pushing the market. The Saudi Arabian stock market fell amid fears of oil shortages following attacks on two of the country's key plants on Saturday that shut over 5% of the global oil supply. Saudi Arabia's Tadawul index was down 0.62%, with the financials and petrochemical shares weighing the most on that index. In Qatar, the stock market slipped 0.39%, driven largely by Brawa Real Estate, which was down about 1%, and Gulf's largest lender, Qatar National Bank, trading 0.3% in negative territory. Europe still has a couple of hours into today's trading day, but stocks stalled in the morning as investors monitor the fallout from the weekend Saudi oil attacks and the response from the U.S. and traders. Let's bring in Ashutosh Pandey, my colleagues for DWTV, reporting for Channels Television live from the Frankfurt Stock Exchange. Good afternoon, Ashutosh. It's good to have you on the show today.
Hi, Bosin. It's a pleasure to be here.
Great, a pleasure to see you again. So, how are investors in Frankfurt weighing the outcome of those Saudi oil facilities attack? Is this still a major concern for investors at the German DAX?
Of course, yes. It's a major concern. They are bracing for now a far longer outage than than they were initially predicting. And now there is some clarity on that. Saudi Aramco has said that it could take weeks or even months to restore full capacity. And now that has actually spurred some sort of concerns here, because they don't know if there is enough idle capacity to bridge that gap. And if you actually take into consideration the idle capacity at major oil producers, it still at best could be 70% of the gap that could be covered, but still that's a huge concern. Now that is in return, that is actually leading to further worries about how this could lead to price rise. Oil prices have already soared. They saw historical gains yesterday. And what kind of impact would it have on the economy, which is really not in the best of shape? It is slowing down, and there are fears of recession. So in all this, how it is going to affect the economy is a major worry. And add to that, what happens to the geopolitics in the region? Are the tensions going to increase? Is there going to be any sort of a military intervention? So all these things are actually spooking investors here. Although for now, President Trump has said that he wouldn't be very keen on a war with Iran.
Yes, so and that's on the negative side. But do you think the market is positive or on the news that the Chinese Commerce Ministry sent in a delegation to the U.S. This week to prepare for a meeting with top U.S. Officials in terms of the tariff fight between Washington and Beijing? Do you think this will calm the markets a little bit in the days ahead, penultimate October, when they meet first week?
It's a definite positive, and that's reflected in the markets also. Markets have been too eager to grab on any positive headline on the trade war front, and this is one of them. It's just one delegation now coming to the US to set stage for the final talks. We don't even know whether what that's going to lead to, but then it's a positive that at least they are talking. And honestly, at this point of time, I wouldn't bet my money on a deal. Perhaps at best it could be a temporary deal, not an all-encompassing deal, but a sort of a piecemeal kind of a deal in which some of the issues are dealt with. And the market's confidence also comes from the fact that perhaps it is one of the best times in this entire long-drawn conflict in the past 1.5 years. After that May talks break down, perhaps this is the best time for them to resume talks, because you've seen that there have been goodwill gestures from both sides. There's also the fact that there are other incentives in terms of like how the economies in both sides are slowing down. The US farmers, which is a key base, voter base for President Trump, they are suffering. The US consumers are now feeling the pinch. So perhaps both have clear incentives to now talk about a deal seriously.
Ashutosh, if you're not putting your money on these trade talks, I'll take your advice. I'm not going to put my money as well. Let's wait and see how it goes. But of course, I'll follow the money. I'll follow you. But there's a big money in contention here between the European Commission, Apple, and Ireland over some multi-billion euro tax issues. They're taking each other to court. This is big money, and there is always a fight where big money is involved. What more can you tell us?
Absolutely. I mean, this is a tax ruling by the European Commission that called on Ireland to collect 13 billion euros worth of tax from Apple. The European Commission said that the Apple was treated favorably as compared to others. It enjoyed some sort of privileges that the other businesses did not enjoy. The tax rate was far lower than what the others were paying. Both Apple and Ireland actually dispute that, and both have taken the matter to court. And today the hearing starts, although any verdict on this would of course take more than a year for us to actually get a hand on any verdict in this case. And eventually it will also land in the European Court of Justice. This is the second highest court in which it is being heard from today. But yes, Apple's contention is that it says that it followed the rule of the law, the rule of the land that at that point of time. It paid the taxes that were due to it, and now it is being forced to pay the taxes, pay a government that is not even telling or saying that that money is owed to it. So that's the thing. And then the other point that Apple makes is that it is making most of its value, or creating most of its value, in the United States in the form of research and development, in the form of intellectual property, and that's where it is paying a bulk of its taxes. And in Ireland, it is only doing distribution and storage and procurement. So clearly it says that it should pay higher taxes in the US and a bulk of its taxes there. On the other hand, Ireland says that, well, it is eager to say that you are infringing on our sovereignty. This is our low corporate tax regime, and it's fairly legal for us to have that. And if you say that we have to tax a company more than we have taxed, then you are actually infringing on our sovereignty. And at this point of time, it is also one thing to give a clear message to multinationals that, well, it is a stable investment destination, and they should invest in the country, and they should not get spooked by what is happening in Apple's case. That's the reason why it has brought the matter in court in the first place.
Yeah, I think we should just keep reporting the issue and allow the courts to decide. It's getting very big money, big murky issues, tax issues, a lot of legalese to deal with. So let's just leave it there for today, shall we? Thank you so much from Frankfurt, my colleague DWTV for Channels Television.